this time around, since gold and silver are breaking out, we could see this, rotation from bonds to gold and silver.
Hello and welcome. Thanks for tuning in today. There has been a lot of talk about the bond markets recently. Could rising bond yields be a warning of upcoming financial problems? Here to unpack this topic for us is the Silver Hermit. He is a market analyst and sound money advocate. Oren, welcome back. It's an honor to have you on today.
Hello, how do you do?
Doing great. Thank you for being here. We live in a world that is a result of previous decisions. From the design of a car we see to the width of a sidewalk that we walk on. And this is also the case when considering the economy. Or were there poor decisions that were made after the global financial crisis that still haunt us today?
Yes, this is what I believe. I believe that 2008 was as though the original sin in respect to central banks. They decided to respond to a financial crisis by cutting rates all the way to zero and by printing money in order to bail out the system, a system which was failing and a system which should have failed, a system which was, rotten to the core.
Right?
But they let it live, they resurrected it, and as a result, we are back in pretty much the same condition, only worse with a lot more debt. And I think it's coming back to haunt us. Now, I know that people are kind of tired of hearing about a looming financial crisis because we've been living under the threat of another financial crisis for so long and it hasn't materialized for so long as though people are tired of hearing about it. But that's exactly the point. The financial crisis is going to come when you least expect it. When you're so fed up with hearing the warnings that you stop believing it. That when you stop preparing yourself for the crisis. This is exactly what happens.
It's like the boy
When
that cried wolf.
Yeah, exactly. And look, when I got interested after 2008, I started getting interested in finance. Then I didn't understand this psychological dynamics. I didn't understand why people would not heed to warnings about the financial crisis when it's obvious. And now I know after I've seen it and experienced it on my own flesh, I can see that when you warn people time and time again, now there are good reasons to warn people because the writing is certainly on the wall and you have indicators flashing red. But for some reason, it drags on and on and on. And when it finally comes, you're not prepared. You're simply not prepared because you've psychologically, mentally, you've shut down all the warnings, and then it catches you, by surprise. So I think we are again staring down the barrel of another financial crisis. And people should know that there is increasing talk right now about a crisis both in Japan, in the UK, and perhaps even in France. And that crisis in all three locations has to do with the debt, the national debt, the ever-growing debt, which is becoming more and more difficult to service. And I believe that eventually this will, there's this thing called contagion. I believe that it will affect the US as well eventually. So I think we should have a look today. It's what's going on with Japan, what's going on with the UK, and try to understand why what we've done in 2008 is coming back to haunt us right now.
People should heed the warning. It makes sense that people start to ignore it after a while, but you definitely don't want to get caught with your pants down after there's been this much talk about a particular topic. Our debt level is completely unsustainable. Now, bonds are normally seen as a good investment because they can provide a predictable return and are oftentimes government backed. Oren, how do bonds work, and are they as safe as they are perceived to be right now?
A bond is basically a loan. You're loaning your money to the government. So let's take, the simple example of a 1 year bond. You buy a bond for $100. It has this coupon attached to it, which says $5. So you expect at the end of the year to get back $105, which means that you earned 5%.
Right. And
So
if it was a
yeah.
10% bond at the end of the year, you'd get $110 back.
Yeah. So let's suppose that rates are rising. And for instance, interest rates are rising to 10% per year. Well, that means that your bond is worth less. Why? Because nobody will buy it from you at the full price of $100 because they can they can get a better deal somewhere else. If they were to buy a new bond right now, they would get at the end of the year they'd get $110, not 105. So you need to give them, if you want to sell that bond, you need to give them an incentive. You need to give a discount so that at the end of the year, it would be equivalent to a 10% yield. You need to sell your bond for $95, so the $105 you'll get at the end of the year is equivalent to 10% yield.
Right, to counterbalance that and make up for that 5% difference.
Yeah. So as a result of that, you have this inverse ratio between the yield of the bond and the price of the bond. Its market price.
Okay.
So when yields are rising, that means the price, the market price of that bond is falling.
Right.
So when we have inflation, for instance, and when uh, investors are demanding higher yields in order to compensate them for the falling purchasing power of the currency, then bond yields need to rise, and that means the value of those bonds is falling. And if it happens too rapidly, then the market can absolutely collapse.
So this would be like if, you had bought a property for $100,000, but and it's lost $5,000 worth of value, but you haven't resold it for the lower cost yet. So some of these banks are just sitting on these bonds that they're going to have to sell at a lower rate, and they haven't realized those losses yet. So those losses are just on their books at this time. But
Yeah,
if they,
that's one of the problems that we have with the bond market is that banks they're sitting on because bonds are considered to be the most reliable assets. So banks usually hold a large chunk of their capital in the form of government bonds. And if the market value of these bonds is falling, that means that their balance sheet is suffering, their balance sheet is impaired, and that could lead eventually to the collapse of banks. But what happens when the government itself can go bankrupt? Now, you know, back in the day when they dropped yields so low through QE, they forced they forced the yields off bonds to go lower and lower as though so people could borrow very cheaply. And I argued back at the time, many analysts, many economists, contrarian economists argued that it's a trap, that it's very easy to go so low, but it's very difficult to get out of it. Why? Because when, for instance, if rates fall very low, then it's an incentive for the governments of the world to borrow more and more. And politicians like borrowing and as though investing that money or just spending it because it inflates the GDP, because it creates the appearance of growth. So if you're in the midst of a crisis like the one we had in 2008, and the central bank allows you to borrow very cheaply, it gives the appearance of a recovery. It gives the appearance to your voters that things are better now, so they can vote for you. But it is almost inevitable that eventually rates are going to start rising again. And then servicing that debt, it's going to get more and more expensive. And it was, it was inevitable. We could see it coming from miles and miles away, and we used to warn about it. I have, articles and essays that I wrote about it 10 years ago, even earlier than that, warning that eventually this is going to be a debt trap. That the governments are going to be locked in to this debt because inflation is going to come and rates are going to start rising. And since, governments usually they always overspend. They always, spend
Oh
more
yeah.
than their tax revenue. So they don't have like the ability to repay that debt. So they just try to, just service the debt. And what we've seen, in 2020, we've seen inflation erupting,
Oh yeah.
after COVID, we've seen
They were
inflation
sending out
erupting.
stimulus checks.
Yeah. And central banks had no choice but to start raising interest rates and the stop QE, even reverse QE, we've seen in the US. They've done QT with trying to shrink their balance sheet. That means that the cost of servicing that debt is rising and rising. Now, it doesn't happen overnight. Why? Because as bonds reach maturity, and it's a process, then you need to refinance that debt all the time at higher interest rates. So you gradually see the cost of servicing that debt rising. And now in the US, it is over $1 trillion per year.
The politicians, they do like to look good in the moment, and so they're fine with this behavior, but we'll all pay for it in the future with inflation.
Now, how far can it go? A few years back, I wrote an essay. I was trying to ascertain as to at what point does the crisis comes in which the governments can no longer service their debt and they're essentially bankrupt. And, in theory, that threshold is when the cost of servicing, yeah, just the cost of the interest on the national debt exceeds the tax revenue. This is where,
Mhm.
no government can get out of that because, if your tax revenue is smaller,
Servicing the
interest
debt,
on your debt, then you have no mathematical ability to pay down that debt ever.
then
But
that ship is going to sink. There's no
yes,
way they
but
can get out of it.
Yes, but I don't think I was arguing that we're never going to reach that theoretical boundary because the ship is going to sink a lot sooner than that. Why? Because governments, of course, can't just dedicate every single dollar that they have in tax revenue only to servicing the debt. They have a military, they have police, they have all those services, they have all those employees. They need to pay they
Oh
need to
yeah,
pay social security. They have all those commitments. They can't just let every single dollar that they bring in go just for tax, just servicing the debt. So they're going to reach the limit a lot sooner than that. So we don't know exactly when it's going to happen, but we have an indication. The indication that something is wrong is when bond yields start spiking very rapidly. Because as we said,
ah,
there's this inverse ratio between the price of the bond and the yield of the bond. And if the yield is rising very rapidly, it means its market value is falling very rapidly. It means the public, the investor public doesn't want to buy those bonds. The public is fearful that the government is about to go bankrupt, to default on its debt. So it doesn't want to hold those bonds anymore. It's willing to sell them for a lot less than their official price. It's willing to offer a discount, a bigger and bigger discount on those bonds just to get rid of them.
Gotcha. So a loss of confidence can really make one of these situations worse once people decide they don't trust that that government is doing well anymore. Like you said, these governments have a lot of stuff that they have to finance, whether it be infrastructure or national parks, entitlement programs, you name it.
Yes. And the thing is that right now we are seeing bond yields spiking all around the world. For instance, if we look at the Japanese bond market, right now the 10-year Japanese bond reached 1.637%. Now, it doesn't sound like much because compared to American bonds, that's a very low yield. But you need to remember that it's coming up from practically zero because back in between 2016 and 2020, the yield on the 10-year bond, the Japanese, they're called JGBs, the Japanese government bonds, the yield on them was practically zero. It was even negative for a certain period of time. So you're coming from zero to 1.637%. And in terms of price, that's a huge, huge loss for the holders of those bonds. I have this chart of an ETF which invests in long-term Japanese government bonds. And I can show you that if you were to invest in 2020 10,000 yen in that ETF, right now it's worth a little more than 8,000.
Yikes. So about a 20% loss.
And that includes reinvestment of your yield, of your interest payments. That means that you forego any income. If you take all the interest that this ETF is giving you and you reinvest into that ETF, you still have an almost 20% loss since 2020. And these are supposed to be some of the safest asset. These are the bonds which are supposed to be the core asset of pension funds, of
Right.
insurance companies.
That is really interesting. So the recent rising bond yields in Japan are a warning that there's economic trouble on the horizon for them. And this is basically like foreshadowing what could happen to other countries too. Do you think a financial crisis in Japan could lead to problems for other countries as well?
Yes, because there's such a thing called contagion. For instance, I'll just give you a small example. There's this thing called the yen carry trade. Now, for many years, because rates in Japan were so low, and people used to borrow money in Japan in yen, and then use that money in order to invest in all sorts of assets in the West, which gave you a better yield. And it was as though a trade which couldn't fail. Because if you were to borrow in yen and buy American bonds, you were sure to make the difference between the rates. You couldn't lose. So people just kept on doing that, and it was called the yen carry trade, and it grew bigger and bigger and bigger over the years. But now, look, there's inflation in Japan. So the Japanese central bank has no choice. The Japanese central bank has to let rates rise in order to fight that inflation. That means that the cost of borrowing in Japan is rising. So people need to sell those assets which they bought, yeah, back in the West,
Hmm.
so they can pay back those loans in Japan. And that could
Right.
affect both the American bond market and also the stock market, also the American stock market. It depends what they bought. And sometimes they bought with leverage.
That is really ugly.
So there are estimates regarding the size of the yen carry trade. They vary hugely. I mean, like I found an estimate of $1 trillion, and there is
Oh,
another estimate from Deutsche Bank, which talks about $20 trillion. That's of course with leverage and
I see. So the yen carry trade will really end up hurting our economy. And I mean, that's a pretty big spread. Right? 1 trillion sounds like the bottom end of this thing. And if you add up all of the leverage, it could be as high as $20 trillion dollars. That is insane.
yeah. And if it all needs to unwind, that means a large amount, huge amount of capital needs to leave American markets and travel back to Japan. Now, this is it's something which was building up very slowly for a very long period of time and suddenly needs to unwind and perhaps very quickly, very rapidly. That's the making of a financial crisis.
Right, absolutely. That is actually kind of scary.
Now, I want to say a few words about Japan, which, Japan is a basket case. It's one of the leading economies in the world. But if you look at the numbers, Japan is a basket case. It has a debt to GDP ratio of 236%.
Oh, dang.
Yeah, it's way ahead. It's way ahead of all the Western governments, which have a debt to GDP of about 100%, no more than that.
So they're over two times as high as the Western governments.
Yes. And the reason for that is that Japan had this massive real estate bubble back in the late 1980s, between 1986 and 1991. Now, after their bubble burst, the economy entered this prolonged deflationary period. Now, what the Bank of Japan should have done back then, what the government should have done, they should have allowed all those bad businesses, all those, indebted corporations and also household, they should have allowed them to go bankrupt. And then the system would have been cleared out of bad debt.
I see. So they did the too big to fail thing as well.
Yes, instead of doing that, and it would have been painful, no doubt, but
Sure.
at least it would be over after a year or two. Instead, what they've done is they lowered interest rates. They started doing QE, and this, mind you, happens a lot sooner than what happens in the United States. So they've started doing the same thing. It's the same playbook what the Fed has done after 2008, they've done the same thing, but a lot earlier. They've started doing that about since 1995. They started their very low interest rate policy and QE programs back in the 1990s.
So over a decade before they started doing it here in the US.
Yes. So very low interest rates since 1995, and I think their QE program started in 2001. So they're like 6 or 7 years ahead of everyone else.
I see. So yeah, so this really can kind of be a warning for where everyone else could be heading.
Yes.
There's
Now,
also,
a few more data points. So
okay.
since 2008, the Bank of Japan has increased its balance sheet from 100 trillion yen to 721 trillion yen. That's an over sevenfold increase. And it currently owns 53% of all JGBs.
Oh,
So it is de facto the market. It owns most of the market for government debt. So the way I see it, if the government defaults on its debt, so Central Bank of Japan goes bust as well because, you know, that's his assets, 53% of the entire
53% is
national debt.
that's really interesting. That sounds really dangerous. Now, there have been reports of the bond yields rising in the UK recently as well. Are the economic conditions in the UK similar to Japan?
Okay, so the UK is a different story. But in some respects, it isn't. This theme of excessive government debt and this belief as though we can bail out the economy whenever it's in trouble by lowering interest rates and borrowing and government spending, that's the central theme that we see all across the world, and it's exactly the story in the United Kingdom. So the United Kingdom has a debt to GDP of 96%. It sounds a lot better, right?
Oh yeah, way better than over 200%.
Yes, but still, it has very slow growth, a very stagnant economy. It had, after 2020, it had just as we've seen in the United States, it had very high inflation. Inflation has erupted. It has topped at 11.1%. Since then, it cooled down a bit, but now it's starting to pick up again. So it went down to 1.7%, but then it started picking up again. So it's at 3.8% right now. And I think it's just a harbinger of what we're going to see in the US. Because, I have this theory that we've been through the first wave of inflation and we're going to see the second wave of inflation very soon. So in the US, you still don't really see this next wave coming. The Fed is still under the impression that inflation is cooling down. But I think if you look at what's happening in the UK, it's like the harbinger of things to come. And it shows you how after inflation bottomed, it starts picking up again. So a year ago, in the summer of 2024, the Labour government was formed. The Labour Party won the election, and these are hardcore socialists, and they believe in big government. They believe in higher taxes. So what they started doing is raising taxes on one hand and increasing government spending on the other hand. And you know, rich people, they're not hostages. They have the ability when when taxes are rising, they have the ability to just pack their bags and leave to another jurisdiction where they are taxed a lot less. It is usually the poor people who don't have that ability.
They're
So
the ones
we're
who end
seeing,
up stuck there.
yeah, we're actually seeing, even though they raise taxes on the rich, we are actually seeing tax revenues decline.
Interesting. So that didn't work out too well.
Yeah,
So-
it's actually counterproductive. Now, at the same time, so tax revenues are declining, but government spending is increasing.
Oh
So,
no.
yeah. So the market is as though voting with its purse, and the bond yields, the long-term bond yields in the UK are rising, are spiking, which means that the public is losing faith in the ability of the Labour government to continue funding its debt. And there are already murmurs in the UK that they're going to need a bailout by the IMF or something of a sort. But I don't think that the IMF has enough money to bail out the UK government. It's just they're just too big to bail.
I like the term. Too
Yeah.
big to bail. I like that. So it sounds like um, their inflation rate broke all the way down to 1.7%, but it's basically doubled since then. And now they've been voting to raise taxes and increase their government spending. So that sounds like recipe for disaster. Do you think that the migrant crisis in the UK is making the situation worse for them than it needs to be? Is their government spending too much money on like accommodations for these migrants? Like, or is that having a noticeable effect on this situation?
Yes. This is, I think, undoubtedly exacerbating the situation.
Okay.
The UK, like many other European nations, the UK has this crazy immigration policy, as though anyone who comes is entitled to be housed and fed and looked after, at the expense of the taxpayer. And the fact that they're treating those illegal migrants, they're treating them so well, so others hear about it. Others are learning that the conditions are so good and they're coming. It encourages people to come. Now,
Right. It's insane.
these people, now there's this, among certain economists, this belief as though it's good for the economy to have more people. But effectively, you're seeing that people who are coming from third world nations, usually they don't have any education, they don't speak the language, they have huge difficulty integrating into that society. They're certainly not working, or they're not working right now. They're housing them in hotels. The UK government actually pays money to hotels, to lease hotels for many years. They're paying billions in order to house those migrants in hotels, and they bring no benefit to the economy. They're just a burden.
Right.
Of course, they overcrowd all the services, the National Health Service. If they have any kids, then the schools. If you see an increase in crime rates, and the local population is rebelling against this policy. You actually see this protest right now called "Raise the Colors." British patriots are raising the British flag, and the local police is actually running around taking down those flags.
It's an incredible thing to see. And if these migrants are not being housed in one of these hotels, and sometimes these are really nice hotels, then it's probably because they got arrested and then they're paying for them to be in one of their prisons.
Yes, you also see those, but even if they are arrested, they're not staying in jail for long because you have this, they call it the two-tier system,
That's a
in
really good
which,
point. Yeah, a lot of these people are just getting a slap on the wrist and then re-released to go do commit whatever crime it was they committed again. And we're
yeah,
talking about some seriously disturbing stuff going on out there.
yeah, because there's apparently there's this their directive or this guidance from above, from the government, as though immigrants, they don't understand the laws in the West, the social norms. They should get only a slap on the wrist if they commit crimes.
That's
While,
outrageous.
yeah, at the same time, the locals, the British citizens, are judged extremely harshly for any minute crime. For instance, for posts on social media, if they criticize the government's immigration policy, or if they say naughty things about the immigrants, then you have cases in which people got received serious prison
Sentences.
sentences. Yes, they were
Yeah.
sentenced to years in jail for posts on social media.
Yeah, yeah, it is completely unreal and totally unfair to the indigenous population out there, if you will. Um, the,
This is absolutely infuriating for the average person because we have a sense of justice. We want to see people treated equally. No, I'm not
Absolutely.
even talking about the fact that a government is should take care first and foremost of its own citizens before it even starts looking after foreign citizens or illegal migrants. It should first and foremost take care of its own citizens. I'm not even talking about that. We're not even at the point in which the government is treating both populations equally. There were cases, very, many cases of rape and sexual assault by migrants against local women. And I know that European women across the continent are feeling less safe in recent years due to, criminal activity in the streets.
In regards to the rapes, I mean, it's been estimated that 250,000 underage girls have been raped in the UK over the last 25 years. So, I mean, I'm completely disgusted with their justice system and think what's happening to the girls out there is a human rights crisis. And it's crazy that it's going on in our day and age.
Yes. But even if any of this didn't exist, even if these were very nice people who weren't criminals at all, still, there is no economic logic in importing people, poor people, uneducated people, who are not working, who are a burden on the system when you're deeply in debt, when you have trouble servicing your existing debt. So, why on earth would you take on more debt in order to house and feed foreigners? It makes absolutely no sense. It is almost as though the leaders of the UK and other European countries are trying, to tank their own economies. I don't know what they're thinking.
Right. Why would they give themselves this kind of burden if they were really doing what was in the best interest of their economy? It doesn't make
Now
any sense.
we have this a comment by Christine Lagarde, the head of the ECB, as though claiming, "Oh, we need immigration. We need immigration in order to ensure growth in the future." And it could be, there is this belief by mainstream economists that an increasing population is the key to growth. Well, I beg to differ. It's not necessarily this way because it takes a certain population, it takes a certain type of person to create growth. You need people who are educated, people who are law abiding. You need people who are working, people who are creative. These are the kind of people who create growth.
Right. Absolutely. They need to be adding something to the economy in some way.
If you import people who only live on welfare, and they do that at the expense of higher and higher government debt, it looks as though the GDP is growing. It masquerades as growth, but it's not real growth because you're just consuming, you're not creating anything of value. I think all these processes and this situation, both in Japan, both in the UK, and there's talk of other countries such as France. All this, I think it's coming to a head, and pretty soon, because and there are murmurs that these countries are facing default.
It sounds like the time of bonds is ending and the time for gold and silver to shine could be here right now.
Yes, that's a very good point because there's this common belief based primarily on what happened in 2008 that when you have a financial crisis, it's bad for gold and silver as well because as though the industrial demand for them is falling, so temporarily they can fall until the central bank comes back with with its QE and all that easy. This time around, since gold and silver are breaking out, we could see this rotation from bonds to gold and silver because you have one as though safe haven asset which is not performing well, that's bonds, and you have another safe haven asset which is performing very well, which is gold and silver. So perhaps investors are finally going to, get the memo that gold and silver are in a new bull market, and they're going to sell some bonds and buy some gold in order to protect themselves from this looming crisis. And we could actually see, this time, we could actually see gold and silver rallying as all other markets are melting down. That's a possibility. I can't guarantee that this is what we're going to see, but I think it's a possibility here.
Well, I think it definitely makes sense because bonds are typically thought of as the safest investment. And so a lot of people who are looking for those safe investments, um, if gold and silver pop up on their radar, I could see them um, moving into those assets. Hopefully, they'll be able to move into them in physical form. And hopefully, it won't be too hard on the various people out there, especially in Japan and UK that look like their economies could be in pretty big trouble here before too long. Hopefully, it won't be hard on folks in the US or Israel as well. Well, Oren, thank you so much for coming on to share your thoughts about this. I really appreciate it. Please check
Thank
out
you.
his links in the description. Thank you to everyone who watched today. I appreciate each and every one of you, and I hope you all have a great day out there.